Hello, everyone, and welcome to the O'Hare Wealth Management Weekly Update for August 18th, 2026. I'm Jerry Jones on behalf of the O'Hare team. Thank you for joining us. As always, if you have a question you would like us to consider on a subsequent call, please submit it to us at service@oharewealth.com, or you can text or call us directly and we'll try and get it on. This week, we continue a topic that we started last week, which is 529 accounts. We're going to get more into the nuts and bolts, or the ABCs, of what happens in those accounts this week with this question: what's the best way to utilize funds from a 529 account? There are many options. First thing we want to talk about, though, are the qualified expenses that can be paid from a 529 account, just so we're clear on what can go or be funded by the 529. Let's take a look at those in detail. Funds can be used for a wide array of expenses, including some that you obviously know: college tuition and fees, on and off campus room and board, books and supplies, and computers and equipment. Others not as well known: K through 12 tuition and certain expenses related to those can be funded from a 529 account up to a maximum of $20,000 per year. A lot of families find that the lower levels of education are very expensive, and it might behoove them to use the 529 account at that point. Also, apprenticeship programs, plumbers, master electrician, and those things of that like. Also, student loan repayments up to $10,000 over the lifetime. Certain credentialing expenses, as well as a rollover to a Roth IRA. However, as we mentioned in last week's call, certain conditions do apply. Next, let's talk about the pros and cons of how to distribute those funds. There are three main ways to do that: directly to the institution, directly to the beneficiary or the child, or directly to the plan owner. We're going to walk through some pros and cons of each of those options. First, directly to the institution. The pros here: reduces the risk of misallocating funds or triggering accidental non-qualified withdrawals. This also provides a direct audit trail proving the money went straight to the qualified tuition and fees for that institution. On the con side, it is definitely not suitable for reimbursing miscellaneous out-of-pocket costs that have already been paid. So if you've already purchased a laptop, you've already purchased a screen, or anything that has to do with education, and you're just looking to reimburse yourself, not the tool here. Also, timing can lag, requiring careful coordination with the tuition deadlines. So make sure you are very clear on the institution's deadlines. Secondly, directly to the beneficiary. The pros here: easy way to give the student direct spending money for off-campus rent or local supplies. It also teaches young adults basic financial management regarding school budgets. Some of the cons, I'm sure you can imagine: if the student uses the funds for non-qualified lifestyle expenses, it definitely triggers taxes and a 10% penalty on earnings. Additionally, this is harder to track and maintain proper documentation. If I'm listing out the three, this is my least favorite of the options. It comes under the category of know your student and trust but verify that the expenses are being paid. This tends to be a better option for students who are further along in their schooling, such as juniors and seniors. Next, we go to directly to the plan owner, which is you. Pros: highly convenient for reimbursing out-of-pocket costs paid for by the owner. Also, it keeps total control in the hands of the plan owner. On the con side, reimbursement must be done in the calendar year the expense was paid to maintain your tax-free status, which means you, once again, cannot miss that deadline. Also, it requires pristine record keeping in case of an IRS audit. So you want to make sure those records are in tip-top shape in case the IRS comes calling. Otherwise, it gets to be a very uncomfortable conversation. So once again, those are the three options for paying the money out of the 529 accounts. If you have more unique questions about your individual situation, don't hesitate to reach out to a member of the team. That brings us to our book recommendation for the month of July and August: Why Nations Fail. John Sr. on our team has done a great overview of this out on YouTube, so please take a look at that before you dive into reading this book, but it is definitely a good read. With that, that wraps up this week's call. We really appreciate your time. If you have any questions, don't hesitate to give us a call. Otherwise, on behalf of the rest of the members of the O'Hare Wealth Management team, we thank you for being clients, and we hope you have a great day.